I'm bearish in the market, but don't want to be overexposed because the positive drift of the market. What trades would you apply? I feel selling a call in the equity market is a gamble. Oh, okay. Before I get to that, I want to clarify positive drift. Positive drift does not mean that the market will go up in the next 45 days. It just means that over time, there is some non-zero return to the market that's inherent in equities, right? Because if you have a stock market that doesn't grow, that's a problem, right? That means there's something fundamentally wrong with the economy of that country. But that's a very, very long-term macro thing. Positive drift is realized over the last 10, 20, 30, 40, 50 years, right? So I wouldn't be afraid of positive drift on a 45-day trade. And especially because all that is priced into the options market already, right? And it's a very small pricing in because it's 45 days, right? And positive drift takes place over many, 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 many years. So I would say if you're bearish, feel free to sell a call spread, whatever. But I don't think worrying about positive drift is necessarily warranted. Positive drift isn't mean reversion. I think that's a big misconception. Just because there's positive drift, it doesn't mean there's mean reversion. So if the market's down, for example, 60 points right now, which is insane, again, it doesn't mean that there's going to be some big whipsaw to the upside in the next 5 minutes because of positive drift. Right? Positive drift is not a day-to-day, month-to-month thing. Now, if you're worried about a whipsaw, that's different. If you are worried about a whipsaw, then I would challenge your assumption that you're bearish. Because if you're worried about a whipsaw and you think whipsaw is coming, then I would say you're bullish in that case. You can't be both bearish and bullish at the same time. That's, I think, important to note. Okay. Thank you for that question, and very good question as well.